Well, the Bank of Canada has made some announcements about the end of quantitative easing, meaning they will cut back their buying of bonds by 3/4 from $5 billion a week to $5 billion a month. And just so you know, I have no idea what that means. But I do know they are trying to wrap up the pandemic stimulus packages that were put in place. And that likely means that interest rates will start to rise to their pre-pandemic levels. I mean, I'm hoping anyway. And I'm going to talk about that in this video right after I ask you to please subscribe to the channel and make sure you hit that notification bell if you'd like to stay up to date on all things Surrey real estate. Make sure you hit the like button for the YouTube algorithm. I try to put out 3 of these videos every single week, and all I ask in return is that you can make that thumb turn blue. And remember, if you have any questions about BC real estate, specifically in my marketplace of Surrey, BC and the Fraser Valley, you can book a call with me right down below in the description at a time that works most convenient for you. But enough about that. Now let's get into interest rates. And originally the Bank of Canada was talking about possibly increasing interest rates as soon as 1 year from now in October 2022. But just recently they announced that their rate hikes may start as soon as March or April. That means this spring, in just a couple of months. And one Scotiabank economist actually thinks that those interest rates are going to continue to a total of 8 times over the next 2 years. But if they're not going to increase rates now, and they're going to increase rates in the future, why would they tell us now that they're going to do it in the future? Well, the truth is that often just the talk about increasing interest rates has the same effect as actually increasing interest rates. You see, actually increasing interest rates would have the effect of increasing payments. Therefore, buyers would start to put their foot off the pedal a little bit because they don't want to spend so much. And just that would cool the real estate market, which is something that I think everybody in the industry would actually very much look forward to right now. But often just the talk of increasing interest rates has the ability to strike fear into the hearts of buyers, causing them to back off, and at the exact same time striking fear into the hearts of sellers who think they have to sell now because they will sell for less next year if rates do in fact go up, thus slowing the amount of buyers in the marketplace and increasing inventory, which then slows the market. Both of these things happening at the exact same time would for sure help our market and our record low inventory problem that we have. So the Bank of Canada has made this announcement in theory to hopefully slow the market before they even think about actually increasing rates, which would slow the market without the actual hike, keeping those payments for the buyers lower. So the next question you have, specifically if you're a homeowner, but maybe if you're a buyer, is should I lock my rate in right now? Or should I move from a variable product or variable mortgage to a fixed term mortgage? And the answer is, well, no, at least not yet. You see, rates are still at all-time lows, and it's too early to tell when the rates are going to increase and by how much. So for the time being, if you don't lock in today, I think you're going to be just fine. That being said, if you are shopping for a property as a buyer, you should always lock in now, and then if rates go down, you can usually lock in at the new lower rate in the future. You see, most federal rate hikes, or at least the expected federal rate hikes, are 1/4 point at a time, and they're usually implemented the day after the announcement of the rate hike is made. And normally what will happen if you have a good broker is the day the announcement is made, it doesn't take effect till the next day. So your broker is going to hopefully, if he's good, re-lock in all of his clients that day at yesterday's rates. And for variable, well, most variable rates right now are still at least 1/4 point or more less than the fixed rate. So even a 1/4 point increase would not be as high as the new 5-year term product that you could lock into if you wanted to secure things and stop the rate from rising in the future. On top of all that, if you're going to lock into a 5-year mortgage, you have to know that most 5-year terms actually end up getting broken before their maturity date. And then the fear you have about paying too much interest, you're actually going to convert that fear into paying too much penalty if life changes or you decide to break that term early by, I don't know, selling your house,
Maybe getting a divorce.
that's right. There's all sorts of things that could cause you to need to break your term early, even when you're not expecting to. And I know you think you won't, but I'm telling you, the stats say you likely will. Next, when rates increase, you have to know that prices will stabilize or possibly even start decreasing. So that means when rates rise, you may actually end up with a better purchase price on your next property, but only your purchase price will be lower. And if you have a mortgage,
like everybody does,
your payment will probably stay exactly the same due to something called your debt servicing ratio, which means the bank is probably going to try and get 39% of your income no matter what happens. And if you want more information about what you qualify for and debt servicing ratios, make sure to go back and check out this video. And what this all means is the better time to buy, if you do require financing or any sort of a mortgage at all, is likely still now while the rates are still low, because you're going to get the benefit if you lock in for 5 years of those still low payments for the next 5 years. But I do expect to see rate increases in 2022. And my guess is that we're going to see 3 over the course of the next 12 months. And what does that mean for you? Well, you're gonna have to check back on the channel in a few days for this video talking about what will happen to you and your qualification when rates actually do rise, as we're expecting in the new year. Until then, if you have any questions about the market, please feel free to book a call with me down below in the description. Remember to hit the like button to help get this information out to other people just like you. While you're down there in the description, you can also download our free Informed Buyer's Guide. Check out a playlist while you're here on the channel, and we'll see you in a couple of days.